So today, let's talk about the Chinese EV maker, NIO, because right now it is at an absolutely critical make or break moment. And if you're watching this stock, you have to understand this inflection point.
And really, it all boils down to this one question. Is NIO a golden opportunity, a company on the verge of a massive breakout? Or is it a classic value trap, where all the risks are just hiding in plain sight?
And this slide, wow, this really tells the whole story, doesn't it? I mean, on one hand, you have a stock that has just been completely annihilated. We're talking down over 90% in 5 years. But then you look to the right and you see this bombshell. The company is now forecasting its first ever adjusted profit. It's this incredible whiplash from total disaster to sudden hope that makes NIO one of the most interesting stories in the market today.
Okay, so what is going on here? What's behind all this sudden optimism? Let's dive right into NIO's moment of truth. This right here is the number that has changed everything. NIO is projecting that in the fourth quarter of 2025, it will post its first ever adjusted operating profit, somewhere in the ballpark of $100 to $172 million. And honestly, that single projection is the catalyst for this entire bull versus bear debate we're seeing.
All right, so first up, let's look at the bull case. Why are some investors getting so excited about NIO all of a sudden? Well, it all comes down to the idea that the company is finally entering its payoff phase.
Look, the bull argument is actually pretty simple. For years, NIO has just been burning through cash, building factories, pouring money into R&D, and setting up its really unique battery swap network. The bulls are saying, okay, the heavy lifting is done. All that investment is in the past. Now it's time for the payoff.
So the bull case really stands on three key pillars. First, there's the profitability inflection. The idea here is that since the huge spending on factories is mostly done, every new car they sell adds way more to the bottom line. They've finally reached scale. Second, you've got the valuation. The stock is priced like the company's about to go bankrupt, not like a company that's growing revenues at a crazy pace. And third, and this is maybe the biggest one, is their infrastructure moat. We're talking about this massive network of battery swap stations all across China, something that would cost a fortune for any competitor to even try to copy.
And if you want proof that this moat is real, look at this. During the last Lunar New Year holiday, NIO's network did 1 million battery swaps in less than a week. 1 million! This isn't just some marketing gimmick, it's a real, tangible advantage that people are using every single day. No other competitor can offer that kind of convenience.
And you know, it's not just optimistic folks on the internet. Wall Street's consensus is actually a moderate buy, and their average price target suggests there's a lot of potential upside from here. So yeah, it looks like the pros are seeing some pretty good reasons for optimism too.
But, of course, it's not all sunshine and roses. We have to look at the other side of the coin, the bear case, because, believe me, there are some major headwinds here that could completely stop this comeback story in its tracks.
For the bears, the story looks totally different. You know that battery network the bulls love so much? Well, the bears see it as a giant black hole for cash, a high-cost pile of uncertainty that's going to need endless capital just to maintain. They say it's not a moat, it's an anchor weighing the whole company down.
So the bear case also has three main arguments. First, that financial drain we just talked about. That network is a constant, massive drain on capital. Second, there's huge geopolitical risk. As a Chinese company, NIO is caught in the middle of trade wars and tariffs that could absolutely crush its plans to expand globally. And third, the competition in the Chinese EV market is just brutal. We're talking about a full-on price war that's squeezing profits for everybody.
Okay, so beyond what NIO can actually control, there are these huge wildcards out there, external factors that could totally change the game overnight. And the two biggest ones are chips and politics.
I mean, just look at this chart. It tells you everything you need to know. 100% tariff on Chinese electric vehicles. That basically slams the door shut on the US market. It severely limits NIO's growth potential and keeps it trapped in that hyper-competitive market back home. And then you've got this. This quote is a huge red flag. And it's not from some random analyst. It's from a top executive at Li Auto, one of NIO's biggest rivals. It's a stark warning for the entire industry. Because it's simple. If you can't get the chips, you can't build the cars. It doesn't matter how great your product is. This is a massive, looming threat to everyone's production goals. Okay, so we've heard the good, the bad, and the ugly. Now, let's get practical. Let's look at the key numbers and dates that you really need to have on your radar if you're following this company. So from a trading perspective, the stock is kind of stuck in a range right now. The key levels to watch are the support down at 439, that's basically the floor where buyers have been stepping in, and then resistance up at 538, which has been acting like a ceiling. And that analyst target of 673? Well, that shows you where Wall Street thinks this could go if everything starts to break right for the company.
And looking ahead, you're going to want to circle these 3 dates on your calendar. March 10th, 2026, that's Judgment Day, when we see if that profit forecast is for real. Then in April, they're unveiling their new flagship SUV, the ES9, which could generate a lot of hype. And on June 1st, deliveries for that SUV begin, which will give us the first real clue about customer demand. Any one of these could be a huge catalyst for the stock.
So it really all comes down to this one final question. Is NIO's future going to be written by its own execution, by what happens on its balance sheet, or is its fate going to be decided by forces completely out of its control, by politics, by tariffs, by things happening in the global headlines? That, right there, is the billion-dollar question.